Let the dogs out. Oh, let the dogs out. But the party was nice, the party was pumping. Hey, yeah. And everybody having a ball. Until the fellas started name calling.
All right. Good morning. Good morning. It is 6:32. It is July 25th. It is Thursday. Oh my goodness, we're almost through July. Hopefully everyone's feeling well and handling the volatility. Take a look at disclosure and let's get to it. All right, guys. My name is Scott Redler. I'm the Chief Strategic Officer of T3Live.com. Welcome to today's 6:30 Club. I know yesterday got deemed as one of the worst days since 2022. The SPYs were down 2%, the Qs were down like 3%, the semis were down even more than that. And it's our job to figure out what our time frame is. It's our job to figure out how to maneuver all your different financial vehicles in life, right? And at 51, my financial vehicles are different than a 25-year-old's, a 30-year-old's, a 70-year-old's. It's all depending where you are and how you manage them. And it's not easy to do. And it takes a lot of time. It takes a lot of concentration, a lot of process. Let me just real quickly say hello to some of my dogs around the world. We got Myers from Texas. We got Big D coming in. We got Arsley getting it done. We got Sully. What up? Good morning. Good morning. What up, Bobby? My boy from the Alpha team, as well as Blair and some of the others. What up, Scotty Gids? So anyway, usually on Friday I come up with, I do always do the S&P weekly chart, and I try and just combine all the time frames. Because again, for me, the reason I started the 630 Club in the year 2020 during the pandemic, because I was sitting here in the Short Hills office and people were like, Red Dog, what do we do? They shut down the world. Do I sell my 401k? Do I sell my IRA? I'm like, listen, I was on TV every single day during the financial crisis, okay? The worst financial crisis that I felt in history, 2007, 2008. If you would have timed it and got out of the market in 2007, okay, and never got back in, by 2011, the S&P was at a new all-time high, and then so that took like 3 years in the worst. That was a financial crisis. That was a housing crisis. That was everything. Like my mother-in-law took all her money out of the bank and put it under the mattress. That's how scary it was. Okay, this is not scary. This is a corrective phase that's being caused by the Fed because inflation was too high. There was too much money. And, here we are where the NASDAQ is still up, 20-something percent, and the S&P is still up 18, 19%. And here everyone's crying. But anyway, so what I do is I figure it out, for trading, for T3, my T3 world, okay? At this point, I'm like a mini PM. Most people who've been trading as long as me, for the Alpha team, we treat our lives as mini PMs. That means I have an active account where I day trade. I have a swing account to have stocks that are above the 21-day acting special. I have a box that takes all my both accounts and makes it either bigger or smaller, meaning if I make money, it makes double. If I lose double. And then I have my options account. So those are my 4 accounts to get paid quarterly. So I got to time all that, And if you think about it, 2-3 weeks ago, or June 20th, is when the semis broke. That was, hey, we can't be just sitting in semiconductors riding the trends like we tried to do with Nvidia and Avago and AMD and ARM. Boom. Then all of a sudden, mega cap tech broke. All them. Once you break the 8-day moving average, in order to get to the 50-day moving average or the 100-day moving average, what do you do first? You have to break the 8-day. That is why we use that as an active trader who trades for a living. Not long term, but some actually people do that with their charts. But anyway, and then a week ago or so, the SPYs started to follow, and then they did a little curveball with watching the IWM and XBI and some of those sectors act well while they sold off the leading sectors, and made you think you can be in some things. Then obviously yesterday when the selling all hit, everything just went lower. So anyway, let's first just take a quick look at the chart of the SPYs, because I'm talking to you conceptually, and you could see that here, this is the ascending channel. That was our last push higher. That was basically 565. So you had a breakaway gap to the downside right there. That was July 17th. That was a move that couldn't fill the gap, showing the bears just kind of surprised the bulls and took over. Sending channels break, you get risk down. Here you closed in the lows right around the 8-day. And really you weren't sure, but once we broke this, that was your sign to get out of so many momentum names. And that was after the Qs and and the SPYs, I mean, and the Qs and the SMHs already did that. And then you had to move lower. And if you happen to not get out of a lot of your stuff in these 3 days, on Tuesday, you had a retest into the 8 day that got rejected. So with that being said, you had all these different ways to manage it. And prior to that, you had the semis, which was the first group that went lower. Like, look at the semis. The semis gave you so many clues. I haven't been sitting in a semi for more than, a morning or a day since. Here was that overheated, overcrowded trade. And then if you happen to have missed getting out of stuff, you had this crazy bearish engulfing bar that couldn't retrace 50%. And then you had a bear flag and boom. So what about here? Okay, this is an interesting spot. This is 239. That's the March high. We went to 240.36. Here's your 100-day. I would not be pressing shorts into this spot. There is a chance today you get maybe a cash flow long. Okay, 240.36 is the rubber match spot. Right now, the semis, the SMHs are down 239. Okay, I would not be pressing, meaning press means pressing shorts, adding to shorts into this spot. The question is, can we make a little bit of cash flow long? And chances are this is not the bottom of the semis on July 25th, and we have another 4 to 5 weeks of probably more volatile times. So this isn't a spot to put so much to work, but a spot for maybe a trade. But overall, again, here is where you had your faulty signals. This was happening before the SPYs. So 240.36, watch this 100-day. Then if you go to the Qs, the Qs followed later. Okay, the Qs basically put in that wide range bearish bar also. Okay, that was a little bit after the SMHs. Okay, the semis led tech. Okay, and these are all old things that I had on here. All right, here was that bearish engulfing candle. Here is lower high bearish flag. Here's where it really gapped down, broke the 8 day. So if you happen to not get out of things here, you literally had a day or two to get out of it, or you had this retest into the moving averages that got rejected. Now this gap is gone, so this will no longer be on the chart. Okay, this is yesterday's lows. Here's one spot. Okay, this is a decent spot. Maybe we get some kind of bounce. The 100 days all the way down here, but ultimately it seems like the old highs here from March and April, 449.50 comes in right there, and then who knows, maybe the 200-day moves up. But again, here you're above the 21-day trending. That was when you were in an active portfolio approach. Right here was your shot across the bow, and then the active bears took over. Okay, these active bears, maybe they have control for another 4 weeks. That's 5. Another 8 weeks or 10 weeks. Maybe it goes all the way into October. You don't know. Okay, we don't know. We just play the action. We go day by day, week by week in our active trading world. Long term, listen, Red Dog has a 401k every single month. I'm putting money in. It doesn't matter. I'm 51. I'm going to be doing it for 8 more years. If all of a sudden we go down into and last longer, and the statements, who cares? This will help your average cost. My wife's 403b, which is, her, she is in private practice. That's a different way to save money. And then the 529, Chase will be a rising sophomore. I'm not worried about the next 3 years and whether it's 529 is going to go down. And then everyone's like, cash. If I have a cash account, which is my wife's blood in the street account that was from UMD&J that she couldn't put money to work, everyone's like, Red Dog, where are you going to do it? Where are you going to put that to work? So let's real quickly go back to the SPYs. I was thinking of doing it here. When we were having the retest into the 8 day, I'm like, what, this 540 area could be a spot for a tier 1. But again, it's July 25th, and just doesn't feel like this is blood in the street. This just took out this extra fluff. So to me, I'm kind of thinking last time we did this, I put the blood in the street account to work. Remember, here was your bearish engulfing day. Here was your chop, and then you had to move to the 100-day. So if we get to the 100-day, that's a little bit closer to 524.60, 52.75. I don't see why we wouldn't get here at some particular point. So I did not put the tier 1 to work. I'm going to wait. I'm going to, then let's go back to trading wise. Okay, SPYs today are a bit lower. They're down to $1.50. I don't own any SPYs. I sold some premium. I made some good money in the puts last week. Here's 151. It's 539.70. Here's where a gap fills to 537. So, we're not that oversold. The Alce is minus 11. It was much easier up here. We were plus 80, so it's an easier short. But anyway, maybe this morning for active cash flow, you could be looking to, buy into this little spot. Okay. This is, again, I didn't have the chart up on the last part. So this was the last time we came in. This was 5%. We hit the 100-day. That was when I put tier 1 to work. And I said, hey, if we go lower, I'll put tier 2. If we go lower for months, I'll put tier 3. It was only tier 1. This was, the spot. And then it wound up turning into a good spot, actively also. But anyway, that 100-day is right here. Okay, this is the 100-day 527. This was the prior high at 524. So this feels more of like the spot. I didn't choose this 540 spot yesterday. By the way, also, when I put her money to work, it has to be on the close because it's in Bright House, it's in mutual funds. So she gets a buy at the end of the day or a sell. So I need to have a day like yesterday, like this, where it looks the ugliest, closes on the lows, that I put her tier 1 to work. And I didn't, as bad as yesterday was, I didn't feel like that was in. Even though we're at the 50-day, there might be a trade here, but I do think in the next few weeks we'll get down there. So are the charts coming in, guys? Can you see it, Andreas? Can you see it, Tony? Anyway, so again, let's look at it one more time. The SPYs are down $1.40. I would not be pressing today, even if we go lower. Like the time to have gotten short was the retest into this broken area. You could have bought puts for this week. You could have sold premium. That's what I did. You could have sold some loose longs and then got paid yesterday, or hopefully you just reduced some risk and didn't get caught, because we've been talking about this corrective phase coming on for a while now. So anyway, so we'll see what happens. There is a gap, like I said, to be filled, 537. Okay, so maybe we hit 537 and then it tries to go from red and reclaims 540.29, takes a little pressure off, but chances are, we're not going to get too much. Maybe it comes back up and sees 542, or you get some kind of, that's it. You got to take trades. When you're tactical, you got to take trades at certain areas. So I will look to see if things go from, red to green and you can make a cash flow trade, and then figure out if they roll over. And again, depends on what you're doing. If you're trading quickly, I would not be pressing this morning. I'd be looking in the first hour, maybe for some red to green trades and take them. Well, that's cool, Rick. I am long some VKTX options, but anyway, that is a positive note. Listen, guys, I was pretty damn bearish the last 3 weeks. I was at the highs of my year 2 days ago, and then yesterday, even into the retest, and I was looking for this. I had leftover options. Palantir looked okay. Yes, I'm still in some coin options because crypto was acting well, and some CLSK. Still had some small IWM 230. So yeah, yesterday I lost money also, but wasn't sitting in Apple, wasn't sitting in Amazon, wasn't sitting in Google, wasn't sitting in Tesla, wasn't in all the names that you shouldn't have been in. I was in some leftover names and I lost some money. Could I'm looking back too on how I could have done yesterday differently, and what, instead of selling premium, I should have probably, into this move up, I should have been buying, I should have been buying some puts, but buying puts, lately, during this choppiness has been tougher. So, it could have protected a lot of things. But anyway, that's something you write down for the next time. Same way, I remember when we came in here and I bought, the Blood in the Street account down here, if you guys remember, I was also buying a lot of call options for the next week, because usually when I'm buying the Blood in the Street account, the oscillator is like minus 50, and we're ready for an active bounce, besides it being a good tier 1 spot. So when we get to that spot, how many times have I also said, oh my goodness, I just made my Blood in the Street account 5-6%. Why not put my entire swing account into the stock market and get paid on that for the quarter? Next time that happens, I'm going to be putting a lot more money to work. So you want to make sure you're staying tuned there. So, right, Rick? So anyway, let's go to some of the names real quick. So obviously Tesla missed on so many things, and you have a huge breakaway gap to the downside. I lost some money in options here. Remember, I'm like 213 to 218 is a spot. Okay. Now, really a bigger spot, I guess, if you even want to play it, would be this like 198 to this 198 to 200 area. At this point, it's going to take time. This upper area resolved lower. Elon's talking about the future. Elon's talking about robo-taxis, about autonomous vehicles, about humanoids, and bottom line, that's way away while the EV market's struggling. So right now, Tesla is down 3. Yesterday was your day to short all day long. If you were short, now into this area, we'll see how far down it goes. Yesterday's low is what? 214.71. It's already filled this gap. Would I be looking at this potentially long for a trade? Maybe. Sometimes, Tesla likes to go from red to green, but again, there's a lot of people trapped. This gap is basically down now to this little spot. So we'll see a lot of moving averages coming. I think the more compelling spot for Tesla will be somewhere in the 202 to 200 area, from 271 down here. If you want to invest or, in Tesla, that's probably a better spot. And if you're going to trade it, we'll see. As far as Google, I told you guys yesterday, that 174, 176 is a spot. I tried to hold it, and now it looks like it's on its way to the 100-day. I had no option play, no nothing. You now have a big gap here too. As long as these big gaps and these holes in this chart stay, chances are, they're going to be in corrective phases for a while. Thank goodness, Netflix gave us clues that no matter what Google does, you're not going to have a good option play. So anyway, that's 169. If you look at Netflix post numbers, it's a bunch of erratic crap. You haven't even been able to trade it. It's going to need some time also. Tesla should not break below 200. No, it shouldn't. It could get there, 198 to 202 as far as Tesla's concerned. Anyway, so Apple. Apple was my bread and butter, okay, for a while, right? Apple, we played this trade through 199. It got to 200, built a nice bull flag. I remember buying a ton of options here, and I was done there. And now it looks like it's on its way back to 210. 210 would be an area that would make sense. This morning, I think Apple's down a little bit also. What's Apple doing this morning? It's down $1.75. Maybe today it's worth a look to go. The low here is 217.13. All these things are worth a look, into a down open after a big downdraft yesterday, just for a trade. But I would think this is your 50-day in Apple. That's probably a better spot. So if it were to get down there today, it's worth a look. And listen, if you're an investor in Apple, you've been an investor in Apple for probably 5, 10, 15 years, and you're doing awesome. So don't be selling it now. Can I look at Guild? Sure, I'll look in 1 second. Listen, Apple broke the 8-day right there. So I was out of it. I anticipated. I was just like, I'm taking the trade. But if you were in it, you sure had they sold strength. Right here was your out as an active trader. Okay, that was the 8-day. If you're in it, the 8-day was your guide this entire time, and then that's out. That's why I always post the ebook on the 8 and 21 day as an active trader. If it's above it, you could hold it, you can massage it. If it's below it, you just test little levels, and this way you're not caught in the mess, because there's a lot of messes out there, and we're not caught in any of the messes. But anyway, that's a decent spot, I would think, moving forward. When we look at Guild, I haven't looked at this stock in a while. There's probably nothing on there. Guild seems to be, working decently. Nice little candle yesterday. Lower level trade. Seems like, some of the names that have been down are going well. And as long as this looks decent. I don't know what's doing today. What's it doing today, Guild? It's up 37 cents. It was up yesterday in a sea of red. So when the SPYs are down 12, when the Qs are down whatever, you have a stock up. Yeah, it seems like there's flows going there. Someone asked me about the IWM. Listen, IWM was a big, big, big money trade for a lot of us. Okay, starting from here. Okay, we're in the 201 calls, and then started shorting it up here for the red dog reversal. And then we were buying it in here. And then, now everyone's like, well, do you think it could take out 226 in August? To be honest, if we're going to go down another 3% or so or something in the S&P, it's going to be hard for flows to get so excited in here. If we're going to get an active bounce, maybe the PCE is Friday, the FOMC is next week. If you think it's going to be taking out this 225, 226 area, you can go out a few weeks and buy calls, or you could just trade it. Here's 215, 38. Here's yesterday's low of 217. Maybe there's a spot to buy the IWMs today for a trade. It's actually flattish. But again, this is choppy. Okay, very, very choppy. This was big money trade, big money short, nice, not a big money, but a decent trade. And now it's just a little choppier as yesterday. They get to everything. If the market's gonna be down like that, it's people aren't gonna hide in the IWM. But it is building a flag. Yeah, some people doesn't this look like a nice bull flag? Yeah, this looks like a nice bull flag. Big move. As long as this 215-ish area holds 216, there's a chance that at some point, if the market wants to stabilize and they want, not to have just big sell programs, It can get above this spot. Tom Lee says this thing's going to 275. If the IWMs are going to 275, it's got to get through this 225 to 226 first. The question is, he's saying by the end of August. I don't think so. He's the man. I'm just a trader, prop trader from T3 Live, and I've been doing this for 25 years. Anyway, I think you stay away from that, Joey. Someone wants me to look at CrowdStrike. This had a huge gap down. This is a problem area. I remember right here is when most traders got out of it. Thank goodness. It had a false breakout. I remember I traded this for a breakout and got out. Thank goodness. Look what happened there. Now it's below this whole spot. I would just avoid. You want to avoid the battleground spots that are really, really hard, that's news driven, because it could be strong one day and then the next day something else comes out and gets sideswiped. Kind of like a Boeing, kind of like, a pharmaceutical bio. Where could this go now? I don't know. This is a pretty big broken name that has a lot of memories now. That's a big gap down. Here's another, gap down. Some people thought, oh, I'm buying it right here, and then that happened. This 274 was a spot, and now I would just stay away, Joey. Otherwise, or you just got to close your eyes, and who the hell knows? CrowdStrike is not Apple. CrowdStrike is not, Amazon. It's not. It's just, I'm just saying, like, some people from 2021 down, they were buying PayPal. Oh, it's going to be great. I'm going to buy the dip. And PayPal, even though everyone knows it's not a blue chip company. They were buying UPST. They were buying AFRM. I'm just saying some of these things will never come back to where they were. So just be careful. Let's leave it with Avago and Nvidia, because those are the keys to the semis. Yesterday, Nvidia broke the 50-day. It's nice not to be in it. I actually made a little bit of money short before I left for Fox Business. It broke this, 116.50-ish. I would think that, into this area, will be a nice buy, nice trade. There is a gap here that could fill, or it could be protected, but this is all the way down here. This is 110-ish. Okay, and the 100 days down there. Yesterday's low is 113.44. Wow, I should have just left short that thing. But I didn't, so it is what it is. If grandma had balls, she'd be grandpa, and I did not leave shorted. I made $1 when I could have made a ton more. What did I just say this was? This was 113.44. What's Nvidia doing this morning? It's down 76 cents. A little bit oversold, not a lot oversold. So maybe it tries to go green for a trade, but chances are I think this area gets tested. Avago tried to hold, and wound up breaking this area. So you had a few ways out of this thing, right? You had broke this wedge to the downside, came up, retested it, and failed. Chances are this is going to see, down to the 100-day. The 100-day on a lot of these things should happen. And those should be spots for either a trade or more. But bottom line is, here it's in an uptrend. There it broke to the downside, and this would probably be, a bigger area. Rick says Nvidia is interesting for a cash flow trade around here. Yeah, I would say for today, I could see Nvidia going green today for a trade. It's down 70 cents, goes green. Maybe it wants to retest where it broke down from, but then you've got to make sure. Like, here's Nvidia. Maybe it wants to go, reclaim 113.45 and then retest this area and then turn lower. That's, you have to think about the chart and think about your cash flow trades and think about what you're willing to get out of it. You're not buying it thinking it's, going back towards 119 or 124, like here's your high, lower high, lower high. If you're going to buy it today and it goes from, down 75 cents to up 75 cents or down 60, there's your trade. You might make a few $1,000s. It might happen in the first 10 minutes, and then it might wind up going down lower. So you have to figure out what is the trade you're looking for. Even in the SPYs can go green and push to 542, but then, hey, you might want to step back because that was a spot and that's where it could roll over. So that's what I mean by being tactical until we get a new sequence. All right, guys, 6:55. I'm talking a little bit too much. I appreciate you all, and hopefully you're navigating this as well as you can. That's all you can do is navigate this as well as you can. And if that means cash is a position. Know what you're looking for. Know what account you're navigating. If you have a 401k, just keep going. Don't get scared away from the TV sets. If you're not a prop trader and you're watching this, you're like, I just want to see what Red Dog says. He's been doing this for 25 years. Well, Keep matching your 401k every single month. If you have a cash account and you're like, oh, I want blood in the street, this isn't quite blood in the street yet. If you trade actively for a living, you know what? Hopefully, your swing account sitting in mostly cash, because most things are below the 8-day. Now they're below the 21-day. And if you want to be tactical in your day trading account, you can now test levels, red to green, test levels at the 50-day, test levels at the 100-day, and then we see what type of composure we have. But again, it's July 25th. This kind of stuff can go on for a while. PCEs on Friday. Maybe it's light. Maybe that causes a little bit of a squeeze. Feds next week. Then we have more earnings next week, and then it gets really quiet over August. So know what you want to have on, know what you want to risk, and just know what kind of brain power you're willing to allocate towards this market. Well, it could be choppy and tricky. Okay. Anyway, that's about it. Thanks. Appreciate you. It is Thursday. 8 weeks ago was my valve surgery. My mitral valve wasn't closing. They fixed it. I'm on the road to recovery. If you do have some kind of problem, it's not going to go away unless you face it fast, because the road to recovery is much better. Sometimes if you're cruising along and nothing's going wrong, it's not as good as making your way back. Everyone loves a good comeback story. Later, guys.